On this episode of Through the Pines, we'll provide millennials a guide to financial freedom, and we do have a millennial with us, so stay tuned. Millennials and Gen Z are navigating a financial landscape marked by high living costs, stagnant wages relative to inflation, and evolving career dynamics. Recent data highlights a lot of these changes. Student debt's a huge deal, with over 45 million Americans who owe 1.7 trillion. That's all, trillion at the T, in student loans. We have home ownership barriers, retirement concerns, with only 55% of millennials having any retirement savings at all. And Gen Z is just starting to grapple with their long-term planning, according to recent surveys. And economic optimism. Despite challenges, these generations are somewhat entrepreneurial, with 54% of Gen Zs expressing interest in side hustles, probably because they're just so easy to jump onto on apps. So we will discuss this and put a plan together so that millennials will have a guide to financial freedom. Yes, we're talking to you. Welcome to a financial planning podcast with a down-to-earth vibe. Sasquatch listens while training in his F1 Ferrari. This is Through the Pines. This is a good movie, by the way, if you guys haven't seen it.
I've heard that.
Yeah, it is good. So welcome our advisors for this episode. We have Rex Baxter and Brandon Smith with planwithbaxter.com. F1 was great, I think. If you want to,
I've heard good reviews about it,
yeah.
but I haven't seen it.
told my wife afterwards, I'm going to work on becoming Brad Pitt. Like, I don't know what that means necessarily, as far as I think, but I think like just working out.
I think you're there. I think you are the Brad Pitt of podcasting.
I've been told that.
I think you're there.
I've been told that a lot, actually, and it's just hard to accept necessarily.
I understand.
And I'm about 50 pounds heavier, but that's okay.
I think we're the Brad Pitts of financial advice.
Yeah. Is that
I'm not sure.
I'm pretty sure we get that all the time. Rex and Brandon with planwithbaxter.com are the 2023, 2024, 2025 Forbes Best in State Wealth Management Teams for Utah and the Advisor Hub Fastest Growing Advisors to Watch under $1 billion, along with the receivers of the Ameriprise Client Experience Award, which means they know what they're talking about. But can we solve together as a family here in the podcast studio a financial freedom plan for millennials, Brandon? You are our test rate today. So I guess we've got a
test group of one.
We got a test group of one. That's okay. We got two Gen Xers, and we agreed to not team up on the millennial because
you agreed.
I agreed. The millennials are now currently running the country, running all the things, or at least trying to. I don't know, Brandon. Because they are you're in the age group everyone cares about, right? The hot age group.
Everyone cares about it?
Yes.
You should feel warm.
Careful.
We all care.
It fades. And also,
I feel like I catch a lot of heat for being a millennial.
Maybe, but Gen Z's on your ass. So
they'll take over the heat soon.
They'll take over the heat soon. So as far as a guide to financial freedom, one of the things that we should probably deal with first is debt. That has burdened the millennial generation. Brandon, you want to dive into a little bit, the debt and maybe the student debt and credit card debt that is affecting the millennials at this time?
Yeah, I think so. Obviously, if you're a millennial, you're probably out of college, or at least really, really close to being done with college. And so a lot of times at that point, you really can't change anything on the student debt front. But I think you can be conscious of where your debt is at, what your interest rate is at, what your plan for paying that debt is out at. I remember, I think it was my brother was offered like a student loan or something. It was like I can't, and it may not have even been my brother, but it was like $3,000.
These are my favorite stories.
$3,000 that they wanted to amortize over 30 years, right? I mean, it was just ridiculous. And
$9.87 a month for the rest of your life.
Right. and so we get these questions a lot of, should I pay this off? Should I just hold on to it? And I think a lot of times it comes down to your interest rate. Some debt is subsidized by the government and at a lower rate. Some debt is private and is really expensive. And so I think you need to know that rate and kind of weigh the pros and cons, right? If we took it and put it in an investment account, could we beat that rate, substantially? Yes, we're taking more risk, but if we can beat that rate, maybe we're not paying it off really fast. Or if we have a higher interest rate on the student loan debt, then let's figure out a way to pay that down really fast. Obviously, we don't want to miss matches on 401ks, things like that. But I think creating a plan for, all right, how are we going to manage the student loan debt is a really important piece of that.
I didn't find too much other information on debt with millennials, just outside of student loans. So, Brent, I don't know if you have any idea, just from meeting with clients and stuff, or just working in your daily lives as a financial planner, what the debt situation looks like with millennials.
Yeah. I think one of the biggest things for this age demographic, millennials, but Gen Z specifically, is home ownership. Mm-hmm. I mean, it's so expensive, and you always hear people like, oh, when I was your age, interest rates were 14%. Like, yes, but a house wasn't very expensive either, right? And when you run the numbers on this, and I don't mean to get into a huge debate, but literally it's fairly easy to do. You just look at what was the average income back in the 80s, what was the average mortgage payment between the interest rate and the cost to buy a house, and you it's called the debt to income ratio, right? You just compare how much is the mortgage relative to the income, and it's hard to buy a house now. It's a lot harder to buy a house now.
Well, I can tell you just by looking around our own neighborhood here in Utah that it's not the houses that are going up, it's the apartments that are going up. Like
being built,
the rentals are going everywhere, and so it's like, well, there's a reason for that. It's because people can't buy houses. Yeah, there's demand. So
right,
but there's a demand for two reasons, right? One is that house prices have been expensive, but they've also been unattainable because we've had lower supply of housing for the last 15 years. Yeah. And so you've had to shove those people somewhere, either back into the parents' house or into apartments, right?
Shove those people somewhere. My goodness, yeah.
Those millennials, we got to shove them somewhere. So, and so you had an enormous apartment build up over the last 5, 6, 7 years. And it'll be interesting to see if we start to have an oversupply of apartments here at some point, which if we have an oversupply, that'll start to bring housing prices. It could bring housing prices down or keep them plateaued for a while, keep them flat for a while, as they start to compete for those dollars from rent versus ownership. And so that'll be an interesting dynamic for the millennials. But there's also a mindset shift that's happened, I think, with millennials. I'll ask our resident millennial here in a second. But I think there's a mind shift between, do I want to own a house? And do I want to have to maintain the house? Do I want to have to mow a lawn? Do I want to have to repair a furnace and a central air unit? And do I have to worry about replacing the windows periodically and the shingles on the roof, all of these kinds of things? Or do I just want to go and rent somewhere and have somebody else take care of all the maintenance issues and everything else? And I think that there's a larger percentage of millennials that are in that camp than what we've seen the last couple of generations, than the X generation and the baby boomers. Now, I still don't think that that's the prevailing amount of people. I think the majority of people still want to own, but I think that percentage has increased enough that it's having an impact.
Mm-hmm. Right. I think part of and this is just me, right, being raised as a millennial, I mean, we were just told to a comical amount, right, that you can have anything you want in life, right? You can be anything you want in life. And I think those things it was good messaging. But I think for better and for worse, a lot of millennials get into adulthood and they say, all right, what do I want? Right? Where we look at sometimes our parents' generation that just kind of did, from my point of view, right, just kind of did the status quo, like you just did what everyone's done for generations. And push back on me if I'm wrong on that. And a lot of times millennials are like, well, I really want to travel. And I want to travel more than I want to own a home, right? And is that the right financial decision? I don't know. We can debate that later. But there's a lot more, in my mind, and feel free to tell me I'm wrong, but in my mind, a lot more dreaming of what like a possibility could be and going after that. And then so you see the living in the van, traveling, you see the, and is that the right decision? I don't know, probably not, right? But I think you see a lot more of it, and I think that comes, and this is just me guessing, but I think that comes because so many of us were just brainwashed as a kid. You can do anything you want, you can be anything you want, to the point that you get a lot more.
What are you saying?
That's
Reality was a little
millennial
different?
Way to phrase that.
What do you mean?
that's such a.
What do you mean by that?
I mean, the millennial generation, a lot of times is kind of the "I want it now" generation. They don't want to wait because, and you're saying, well, it's because our parents told us to dream, and anything is possible, and we can have it now, and and we don't have to wait, and we don't have to work for it, and so we get to adulthood and we just don't know what we want. And so we want to be able to travel, and we want to be able to do these things, and we want to be able to do everything that our parents can do. Our parents had to work and sludge and have some grit and fight through everything for 30 years to get to that point. But we kind of want that now.
Rex, what's the first generation that is worse off from the previous as far financially? Is that Gen X or Millennial?
I'm not sure. That's a great question. I'm not sure that there has been a generation yet, officially, that is financially worse than the previous generation financially. I do think that the millennials... Because
millennials are up against it with the housing market.
I think they are up against it. And I think it's too early to tell just yet. Again, a lot of the millennials are kind of in their 20s and 30s is kind of the millennial age range right now. And so I think it's too early to say that their entire generation at that younger age is worse off than the X generation or the boomer generation.
Financially.
Yeah. And so time will tell. And right now there certainly we're in a cycle where financially it's certainly more challenging than a bigger picture for the X and the boomers. But the boomers had to go through the 70s, which were extremely tough with high inflation.
I was just going to ask,
high oil
political
prices.
Climate plays in. So if you've got wars or recession, depression, how does that affect each generation and what you're going through?
Well, I think it impacts the mindset of the generation. And so I think the big impact for the millennial generation, correct me if I'm wrong, but I think the two big impacts are, one is 9/11, on home security and terrorist activity and kind of shaping a little bit of their global awareness. And I think the second big impact, now a lot of the millennials were really young during 9/11 and things like that. They were either just being born or they were maybe 10 or something like that. So they were pretty young.
I was in junior high.
Okay, so you might have been 13.
Yeah.
So they were really young. But then the 2008 financial crisis, I think, had an immense impact on their financial mindset.
Like that immensive. That's massive and immense in two. in
two.
one.
It's
but,
two.
But it did. Huge. Because how old were you then, Brandon?
Yeah, 2020, I think.
Now, did you see parents get hit by it? Is that what you mean? Because like the adults,
I think they saw their parents and possibly older siblings and things like that get impacted by that, and it was just fed to them on the news day after day of the market is tanking, the market is crashing, the financial economy is going down, people's retirements are being ruined, companies are, it's the first time that they've seen during their lifetime of major companies going bankrupt. Right? You had Lehman Brothers, you had Bear Stearns, you had, some massive companies go bankrupt during that financial crisis. You had a lot of construction companies get shut down. With all the loan crisis.
It was a good industry to be in during that time. Mortgages, because that's what I was doing.
Yeah. Yeah, that was a massive shutdown of that industry.
Wasn't that your fault?
It was all my fault. And I will tell you, it was.
You're blaming the X generation for the financial crisis.
100%. But it leads to why, because every generation has to overcome. In other words, I look back at my grandma, who was very frugal, and the reason she was very frugal, Great Depression, right? She scraped the inside of her toothpaste, okay? And so that rubbed off on me.
I still do that.
Okay. Well, that rubbed off on me, and so I get I don't want to use an extra garbage bag until that thing is stuffed. I try to use all the things, where my wife is the opposite. It's what are you doing? Take it out. They're $3 or whatever, whatever. So it does impact you psychologically. And my example, now that I use that motif, I forgot what we were talking about before.
We were talking about the mindset shift of millennials and what's impacted them.
Oh,
and I think
the mortgage
financial
industry.
crisis,
Yeah. So the mortgage industry. So because I basically just use that as an excuse to go back to school because I was in the mortgage industry. And I've told the story before is now my job is to sell loans and give people the best price on a loan. And people would come in, and the government sort of facilitated this. And this is why it's it's not political, but it was facilitated through the government, through different laws that they passed that allowed people to get these loans. And then the companies took advantage of that, and they were like, well, nothing's coming back on us necessarily until it did, right? But they would come in and they'd say, okay, your credit sucks. You have no assets, nothing. But we'll give you this loan for this house that we know you can't afford as long as you make the first payment. It doesn't affect me as the sales rep or whatever. And like everybody gets their checks.
Right.
And then we all know this house is going to foreclose. And that went on for, I don't know how long, that's the subprime mortgage deal. Yep. And that went on long enough that it just freaking bankrupted everybody. And I was in it and still, I didn't recognize that was going to happen. I wasn't at that level. I was just trying to sell loans and sign on the dotted line. But when it started crashing, I was like, well, no wonder it's crashing. Like we've been doing these crappy loans for years.
But it took the crash for you to connect the dots.
to connect
Rarely
the dots.
do people, do they have the foresight to be able to connect the dots in advance. And that's why you have kind of black swan called events.
Yeah.
Because people aren't connecting the dots in advance.
And so what does that do to the millennials who see that? And they're like, I don't know if I want to own a house. Like you mentioned.
I think it's changed their mindset more into being strong savers, really good savers. They save a fairly good portion of their paychecks and their income into savings accounts, even money markets to some degree. And so I think it's impacted that because they want to make sure that they're secure with significant balances. I don't seem to have to educate as many millennials on the need for an emergency fund or what a good, healthy emergency fund balances are. At this point, I feel like they have it fairly well ingrained that they know it needs to be 3 to 6 months to 9 months, of their spending, of their income, and that most of them that I talk to are well on their way to that or have that in place at this point. Where I think it's impacted them is it's impacted their desire to invest to some extent, and it's impacted their desire for some home ownership because they've seen home prices crash. They understand that the real estate doesn't always go straight up in a straight line, and they understand that can come back down and cost them money. Yeah. And then on the additional note, we've had the invention of cryptocurrency during that time.
Yeah.
And that's been their big exciting time period. Just like for the X generation, we had the .com bubble, right? And I'm not calling crypto a bubble, but crypto is the exciting thing of their time period. And for the Z generation, it's probably going to be AI for the generation after them. And so that's where they're dumping more of their money is into those things that are more exciting and more prevalent in the news and the media, as opposed to more traditional types of investments.
Brandon, I'm going to back you up on this. You blamed your parents. I will blame mine.
I did not blame my parents.
Saying,
I think
my
every
mom listens to this
generation blames their
podcast. Take it easy.
Maybe not immediate parents, but being fed like, well, you can do whatever you want when you grow up is what you said.
Yeah,
earlier, right?
Right.
Well, X Gen, and I'll be a case study here. Rex, I won't include you. You can speak for yourself. But we did see, and I didn't. I mean, my mom didn't have a ton of money, but we did. We had a house, and she had a car, and these things that when you turn 16, it's like, wait, time out. I need these things, and I don't have any money, and so a lot of my friends, as an X Gen, ran up debt. And so did you see that with X Gen, Rex, where it was like, we got to have the thing, and we can do it now because there's these things called credit cards, and we just put it on the card. And it was like, as long as my income equals this, and I'm like a fractionally under that with debt, like I was push it to the limit as an X Gen. That's sort of how the way I lived my life for a long time, which was not good.
I think the X generation is a lot more comfortable with debt, and I think a lot of that stems from their parents' generation being so focused on being debt free, and so I think a lot of times the generation under that starts to almost rebel against the concepts that their parents' generation are so beholden to. And so I think that's a lot of times why you see, our parents' generation being, fighting to be debt free and pinching every penny. And then the X generation, all of a sudden they're comfortable with debt, just like the millennials. A lot of times they have boomers as parents, and the boomers are as they're reaching their retirement ages, that's when they're buying the boats and going on the cruises and spending all of that money, because they're not wanting to save it like the Great Depression generation and pinch every penny. They're wanting to make memories and enjoy life and things like that. And then you've got the millennial generation that's coming in underneath that is saying, yeah, we can do anything. The world is my oyster, and we can achieve it all.
Fact check true.
Thank you.
And they're doing that, and that's why you're seeing so many side hustles, and you're seeing such an entrepreneurial spirit. And there's a lot of positive that's coming out of that mindset.
Right.
Certainly, a lot of positives that's coming out of that. And again, they are extremely good savers as a whole. And so it'll be interesting to see if they can migrate that into good investors. And yet they're very receptive, in my opinion, for advice, but they want advice that is very pertinent to their lifestyle, whether it's to their work-life balance, to their goals, to their making memories, whatever that is. They want that advice, and in the financial advisory industry and business, a lot of times they view that advice coming from their parents' financial advisors as sometimes they get put in a box as maybe not being broad enough and being kind of, oh, that's my parents' financial advisor. Their advice is going to be stodgy and old and only pertaining to my parents, not pertaining to me. And so the financial advisor may not understand the role of cryptocurrency or the role of possibly side hustles and side gigs and working remotely and being able to go on a trip and still work a little bit on that trip when they're overseas and being able to fund those different things. Yeah. And I would say for our team, we break that mold, right? We have advisors in just about each of the generations that are involved. And so it's easy for our team to sit there and say, hey, look, this is what this client is experiencing and what they're wanting to do. What's everybody's ideas coming around this in collaboration as to the best way for us to try and help them achieve that. And so I think we've done a good job of assembling our team in such a way to be able to counterbalance that.
Yeah. I think bringing it back to the debt and home ownership for Gen Z and millennials, I think the name of the game is to pay down, even though home ownership is difficult, it's still, and nobody can predict the future, but it still very likely makes sense to get into a home if you can afford it. And so that really comes down to looking at all the debt, figuring out how do we pay things down to get your debt to income ratios in an appropriate amount, and going out and buying a house that you can afford, that you can grow with, have equity in. And I think ultimately, right, like that usually needs to be the goal if we're looking at a long-term financial
plan. How do
plan.
you do that with enormous amounts of student loan debt?
Yeah, it makes it very difficult. It might. I mean, ultimately, it's not those. It's
like,
not
what's
so
priority?
much.
Do you put more money on the student loan debt?
Great question. I'd say there's two priorities. First of all, interest rate, right? Like if we're just looking at debt and saying how do we pay down debt the fastest, we're going to want to pay our highest interest rate, mathematically speaking. But then if we're looking to buy a home, though, it's your debt to income ratio is going to be one of the biggest factors. And what is that? That's what is your total debt payments, all your debt payments added up, divided by your total income. That's your debt to income ratio. And so, you might have a lot of student loans, but they're amortized over 30 years. And so your payment's small. And so if the goal is to get into a home, even though, that might be a large amount of debt, we might want to focus somewhere else where we can just get rid of some payments, some higher payments on smaller amounts of debt that are amortized for a shorter amount in order to get in a position not only to be able to qualify for a loan, but then to be able to afford the loan long term.
Okay.
Yeah, I think that's really wise. I think everybody should rewind that and listen to that. I think that was really important as far as trying to understand what the ratios are that banks are looking at when you're trying to get approved for a loan, and focusing your payments or your cash flow to try and facilitate that. I think that's, in my mind, the number one issue that this generation is having in homeownership is the fact that incomes have not kept up with housing prices. And so because incomes haven't kept up, their debt to income ratio is not good right now. They have the student loans, they have a little bit of credit card debt, they may have a car loan, things like that. But because the incomes haven't kept up, their income is lower, and so that ratio is off balance, is off kilter a little bit.
Yeah, it's funny how naive you are as a child, I guess, and a teenager, even a young 20-year-old, because forever, until I got into the industry, I thought you had to put 20% down to buy a house. I was like, there's no way I'm going to be able to buy a house as a Gen X guy. I'm like, how do people even save that much money?
Like, that house is $80,000.
Yeah.
How am I gonna?
Ooh, 110. How am I going to come up with all that money? And so I'm wondering if there's people out there. It's like, there's no way I can buy a house because I have to pay off my student debt first.
Well, I think there's certainly people like that.
You can Google this stuff now, but we couldn't do it back then. It was like you had to actually call a mortgage place, I guess, but I just didn't know. So I don't know what you don't know.
There's a lot of loans out there right now where you can do 3% down, 5% down, 10% down. You do have extra primary mortgage insurance that you have to pay on top of that, right? Or PMI is what they call that. And so it increases your overall ratio. In addition to that, there's a lot of areas in this country where the government, either state or federal, is providing like an additional $20,000 if it's your first time home purchase towards a mortgage, as they try and get more people to be able to afford homes.
Yeah.
And so again, I don't think it's necessarily the amount. And again, the millennials are fairly good savers. And so a lot of them have that 3 to 5 to 10, some of them even up to the 20% down for that mortgage. They have the cash for that, but their debt to income ratio is upside down. And because the income isn't high enough and the debt payments are too high.
And so if you're interested in getting into a home, if you're Gen Z, if you're a millennial and you're interested in getting into a home, I would say go talk to professionals. Go talk to a mortgage, a mortgage officer.
Yep.
Go talk to a financial advisor, and just get some goals, right? And most professionals will talk to you and say, all right, hey, here's what we need to do to get you in a position to buy that home. And maybe it's 6 months out, maybe it's a year out, maybe you're ready to do it today. Right? Like it just, a lot of times people don't understand, but it's structuring the debt, it's understanding debt to income ratios, and what can we do? The one other thing I'd say is very easily, it is much more difficult to buy a home today than it has been probably the rest of the history of the world, maybe minus like Great Depression or, but it's difficult to buy a home. Just because it's difficult doesn't mean it's not worth pursuing, right? Doesn't mean that won't pay off in the long run. And so I think every generation has difficulty, whether that's a world war, whether that's, being a baby boomer generation and all of a sudden you're going to school and there's a gazillion peers, right? And then you're trying to get into college and there's a million people trying to get into, and then you're trying to buy a house right? Like every generation has difficulties. It's all just different.
Yeah.
And you've got to figure out, all right, what are our strengths? Some of the strengths of today are we can get a great income really quite easily. How do we leverage that to figure out how to get into a home?
Yeah.
Just remember, millennials, you heard it here second.
Papa Rex.
You heard it here second. If you can dream it, you can believe it, you can do it, you can go and get that home.
But you got to work backwards, and that is a popular success hack. It is put the dream out there, put the vision out there, and work backwards. And because once you're like, okay, what I want to do is I do want to own a home, don't want any school debt. Then you got to like talk to a financial planner and a mortgage person and be like, how do I go from point A to point B? Because these are the things I want, but I don't really know how to get there. And that's what you guys do for a living. So very good. Okay. Let's talk about retirement concerns. Brandon, you unfortunately are part of the millennial class.
Unfortunately. This is not unfortunate.
Who, I haven't finished my sentence.
Oh, right.
Who have only saved, about 45% of or 55% of millennials, have any retirement savings at all. So Rex, if they are good at saving, why is it not in retirement?
Can I interject here?
Sure.
Yeah.
55% is not a bad number. I mean, what's
concur.
the
That's pretty
national
good.
number?
Yeah.
And millennials are in their 20s and 30s?
What's the national number that has zero savings for retirement?
Right. Let me.
It's
Probably high.
Probably lower than 55%.
You think so? Zero? Well, I mean, it's because if you got a 401k,
Any
it counts. If
retirement?
you've had a job and it's thrown $1 into a 401k, that counts as retirement.
Yeah.
So to have 45% of millennials have zero retirement, and most millennials are of working age, that's a problem.
Yeah,
And-
it is a problem. Part of it, I think, is how that study is couched, right? Because a lot of, again, I think millennials are good savers, and I think that some of their savings, although it's not technically earmarked for retirement, it's in their mind it probably is for retirement, right? Whether that's their
/
crypto
financial
account,
freedom, like
it
that's
could be
their
their
thing.
crypto account, it could
Yeah.
be their savings and money markets, it could be, and so I think part of that study could be a little bit misleading.
Brandon's smirking.
Yeah,
Yes.
I've got a good. So a Gallup study, April of
Nobody believes
2025.
Gallup. I'm just kidding.
40% of U.S. adults report not having money invested in a retirement savings plan. U.S. adults, 40% of all the demographic.
Versus 55 of millennials.
Right.
Yeah, that's a big gap.
No. Hold on. I think we're inversing.
I'm sure we're saying the same thing,
Oh.
right? We're saying the same thing.
55. So 55% of millennials have
Retirement. Yeah.
So
So
45
45, right?
Okay.
So there's a
but
5% difference.
There's a 5. Yeah, we're 5% worse off, but we're way younger, right? I mean,
Just now working. But you do have the
When you-
advantage of
Yeah, but it's best to save early. You should start saving early.
I'm saying we're doing better than the other generations likely have.
Rex, when did 401ks come along? I heard the history.
Early 70s.
Yeah, and so they're definitely around for our generation. When I got my first job,
Oh,
it
absolutely.
was offered to us. But what I didn't know is that they were not set up to be a retirement plan for the every person originally. They were set up to be like executive, like your board, like the executive board, like the suites.
They were originally set up to replace pension plans.
Yeah,
And
yes,
so-
but for only the executives, not for every employee at the company.
Well, that's no. So
That's not the story I heard.
I get it. I get it.
I
I
tell ya.
understand how stories begin. So the concept was that the Congress was setting up 401k savings plans in order to
I think this
eventually
was before it
replace
hit
the pension
Congress.
plans.
It was like an idea, and then it went to Congress.
And so when they
Trying to save
originally
myself.
set up the 401k plans, some of the technical tax writing didn't have the requirements to where that you couldn't discriminate against employees, and so because there were loopholes in that, it was used initially to benefit more the owner and the executive teams and things like that. Is how it was being utilized.
Makes sense.
But then as those loopholes were being discovered that people were using it in that way, more regulation came into play through ERISA and some of the early, the ERISA acts of 84 and things like that, to where you couldn't discriminate, and it started to eliminate some of those pieces.
And I think and this is a little bit side topic here, but I think the point there too was that initially it wasn't like the management of it had a different idea than what it turned into.
Oh, for sure, because it was being sold to them, and they could leverage it to benefit and discriminate for themselves to save a bunch of their own money and not for their employees.
Yeah.
And so in the early years, it was absolutely being utilized. I mean, the tax code allows you to do certain things. You're going to do certain things.
Yeah.
And until that tax code gets changed.
Yeah. Okay. So Brandon, how do we convince doing pretty good according to the stats, 5% better than the rest of the population apparently.
5% worse.
Worse? Oh, 5% worse. Okay.
But we're younger.
Yeah, you are younger. But as Rex mentioned, and it is true, and you guys are the financial planners here, the earlier you start, the better. So what's the message there when you can't put anything away in your head because you're paying the student loans, you're saving for a house? Like, what's the priority? What's the percentages when the finances are so tight and you're working? Like, do you go do the side hustle thing? Like what's the plan?
Yeah, I think it's recognizing that you're likely, and depending on where you're at, right? But if you've got a family, a young family, which is where a lot of millennials are at, and the Gen Z, you're likely in one of the tightest financial situations of your life, where you're still your career's starting to develop, but it takes a minute to really get those higher incomes. You've got all the expenses of a young family and young kids and trying to buy a house and the debt to income ratio, right? Like, just accept that man, it's tight, and it's probably going to be tight for a few years. However, if we can just save 5% into a 401k plan and get a match, a lot of times those matches are like 4%, right? Then we're saving 9%, and that gets us, I mean, you can do the math. It's crazy how much that sets you ahead. And it's also amazing how little you think you'll notice 5%. And if you can't do 5, start with 3 and then increase it by 1% each year. A lot of 401k softwares will let you just set that up automatically. And yes, it's tight, but usually you can sneak that in. It's really hard and detrimental to miss out on the early savings and to miss out on a match. And so if you can just do that and work that into the already tight budget, I think that's the best thing you can, or one of the best things you can do.
I think the move there too is to make sure it's done on the first paycheck.
Yep.
You see that first paycheck, you got all that money. It's going to be hard to do after the first paycheck.
Yeah, because your mind has already spent your second paycheck.
Yep. Yeah.
So.
Yeah. Okay. Good to know. All right. So, you have some more numbers for us, Brandon?
I do. Yeah. So the short one, the average, and this was done by Charles Schwab, but they said the average American would need a net worth of blank
for what?
To feel wealthy.
2.5.
To feel wealthy.
Oh, to feel what? To feel wealthy? Net worth to feel wealthy?
Yeah.
For what age group, or for everybody?
Average American.
Average
would
American. I'm gonna say.
Average American. Do they know?
I bet they answer $1 million.
I think it's more.
But I think the real number is much higher.
Yeah, I just don't think I don't think they should feel wealthy with $1 million in the bank. They should have 2 or 3.
No, this isn't in the bank. This is net worth.
Yeah.
So it could even be higher. Just
the value of your home.
To remind the audience.
Retirement account.
Got you.
Net worth. Take everything you own.
Yeah.
Just subtract out everything you owe.
Ask me the question again.
And that's your net worth.
What the average American would need a net worth of blank to feel wealthy.
I'm going to say $5 million. I changed my answer.
From 1 to 5.
From 1 to 5.
I'm at 2.5. What's
hey, 2.3.
Ah!
That's really good. Yeah. And that doesn't necessarily mean that's the right number, right? As far as what people think. But that's kind of where people are coming in at saying, all right. And Rex, you nailed it too, right? Because you said 1 and then you said 5, so you split that.
Leave it to a millennial to give me a blue ribbon.
Good job, Rex.
Make me feel like I did a good
Everybody here did great today.
Oh my God. Rex just got a participation trophy.
I just got the participation award.
It's the first
on a podcast.
I love it. Okay, good stuff.
Oh, that's funny.
2.5.
That's funny.
All right.
We always joke now with a couple of our clients, right? And so they'll call up and they'll be like, "I know, Rex, we've got $4.5 million, $3 million, whatever the number is, right?" And I'll joke and it's like, "Yeah, you're just not a double-digit millionaire yet. Yeah. We got to get you to be a double-digit millionaire."
Yeah. Yeah, I know you're 89, but let's get you there. Yeah. Okay, let's end on a high note here. Brandon, the economic optimism or the optimism of the financials for millennials is high, question mark?
Yeah, I mean you're sat here, right? The 54% expressing interest in a side hustle. I've got mixed feelings, right? Because when I was in college, I was working like 3 jobs, right? And just trying to piecemeal this together, and that was probably, I don't know, I was just trying to survive, trying to pay for it, right, and get through without having debt, and so that's how I did it, and I guess it worked. But we get people that are just like, sometimes people so focus on side hustles, and it's like, we'd probably just make more money if we focus.
That's the question. So because we live in this what was the deliver food app,
right? And
Uber, and so everyone just side hustles. It's become the thing. Everyone's got a side hustle. Was that bad? Is that bad for the culture of millennials when they should just maybe find something, stick to it, get really good at it, and make a lot of money?
I think there's phases in life that people have where like, I just need some extra cash.
Sure.
Like, I just need to do this, or my friends are all going on this vacation. If I do this, I can get there, right? And I think the danger comes when all of a sudden,
DoorDash, that's what I couldn't think of.
all of a sudden you find yourself working, a 65-hour week, doing a gazillion different side hustles. And that's what it takes now to meet your lifestyle requirements, right? Because you've gotten used to that extra income, and you've enslaved. You've taken all of the time out of your day, and
it's time. And so that was my question, real quick, Rex, because my daughter was running DoorDash the other day, and she's like, "I think I'm gonna go DoorDash for a couple hours." And I was like, "How much do you make?" And she tells me, I'm like, "You cover gas? Like, how do like this is like you don't make that much for the time and energy that is spent doing it." She's like, "Oh no, yeah, but it pays for this or whatever." I'm like, okay,
right.
If you want to spend 4 hours to just pay for this little thing, I don't know.
But are we counting the depreciation on our cars? We're adding miles to it, and the extra oil changes, and the extra breakdowns, and or do we?
Question becomes: is there a better use of that time? Now, I'm much happier someone doing that than just sitting home playing video games or doing nothing.
Sure.
Like they're trying to do something. It's just like when it comes to your career.
What's the opportunity cost of it is your question.
Yeah.
Right.
Yeah.
And so I think as you look at that, I think there is a significant opportunity cost. I go back to when I started in my career, right, as a financial advisor. It is very difficult to start as a financial advisor in this industry and in this business. And there are many times where you're not making hardly any money. Those, you're at the poverty level a lot of times when you're starting in this business. And so there's a lot of times where I would sit there, late at night, I'm working, and I'm having that thought of, my gosh, should I have a side hustle? Should I have a second job? What should I be doing to try and take care of my family while I'm trying to get this business up and going? And every time I would come back to, you know what, if I just put that same time, effort, and energy into this business, it will pay off. That long-term perspective on my career will pay off, and it absolutely has paid off. And so, am I biased? Do I have a success bias? Probably, right? Because I'm successful and I've been biased, and it worked.
It worked.
And so, but I do.
But that's a case study.
It is, and I do think that you give up a lot of that future long-term growth and expertise and experience by all these other side hustles. So I think it can become a Band-Aid and a crutch for people, and unfortunately, I think some people need that immediately to help finance some of their mistakes that they've made financially, right? To try and dig them out of that hole that they may have put themselves in for one reason or another, or just life circumstances. Maybe they didn't do anything at all, and just life circumstances and bad luck have put them behind the 8-ball, and they have to do something to kind of dig out of that, and they have to use some of these side hustles in order to do that. And I think that's great that their work ethic is strong enough to do that. But I think you have to be self-aware enough to recognize, when do I need to pivot and move away from the side hustle and focus on a core competency, whether that's an entrepreneurial adventure, whether it's a startup, whether it's a career, whether it's a you're going to be a carpenter, a trade, or something like that, a tradeswoman, something along those lines, and make a career of that to where you can go from a check to check kind of mentality to a wealth type of mentality, to where you're actually striving to create something really, really special financially down the line for your life.
Okay. Brandon, how you feel about this episode? Just checking in on you.
Yeah, we want to make sure you feeling okay. How's your mental health?
I think we all had some good ideas.
I feel really good. I have a blue ribbon. I have a blue ribbon to go home
Rex
with. I feel
he's
good.
Fine. Well, thanks for tuning into this episode. Hopefully we gave you some ideas, or maybe just made you feel better about your life since you're a millennial listening to this podcast. But it's tough, and each generation has their own kind of tough when it comes to financials, Rex. So, millennials they're gonna find their way, and I'm jealous on one hand because I can see this on the optimistic side of things, just like with AI and opportunity just booming, and I think they've got a lot of opportunity to make just a ton of money over the next 20, 30 years.
And I think they see that. I think they're excited for that opportunity. I think they see the upsides of all of these opportunities that are in front of them that their parents didn't have and other generations haven't had. And I think that's healthy for the economy. I think it's healthy for this generation to have that excitement and that energy to drive for. And so I'm excited to see what they do for us.
Yeah. I hope they do well. And then I can go back to living in my van down by the river. Awesome. Thanks for listening to this podcast. If you'd like to reach out to Brandon and Rex, you know everything about the millennial generation, planwithbaxter.com. And they will, and other things, by the way. If you found value in this podcast, you can consider donating to us at buymeacoffee.com/Banyan Media. That's the production company here, produced by the Banyan Collective, recorded in our nice little camp studio located inside the Monarch Building, the Nine Rails Arts District here. You can find us on YouTube at Pines Podcast, and where you can see our wonderful, beautiful faces. It's actually Through the Pines, I think, on YouTube, but Pines Podcast on Facebook, Pines_podcast on Instagram. Thanks for tuning into this episode. This has been Through the Pines, reminding you to use yesterday's dollars to finance tomorrow's dreams.